Well, good afternoon, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for the evening of Monday, and this is the 9th of June, 2025. All right, interesting day with what was going on. We saw Netflix down $17 today, but for a $1,200 stock, you're going to get those moves. I'm looking for it to get back into the 1,200 range, not quite here, another 20 some odd dollars, and then I could get interested. I saw the Apple conference. Well, I saw the highlights of it. It was boring. It's that simple. I realized they got this new liquid look to the phones. Is that enough to make you buy it? Probably not, but it'll be nice to have what they're setting the phones up to do across channels of all the Apple products. That much I do like a lot. I didn't hear diddly about artificial intelligence, and I think that's where the miss came in the market, and that's what the market wanted. However, it was a low bar that was set, so don't make a mistake about that. Even though it's down, the bar was set very low. Google, on the other hand, continues to act great. Uber up, as Uber, all eyes are now on Tesla, and Tesla was up because they announced that, yes, January 12th will be when they roll out some of these taxis for autonomous driving. So everybody's got their fingers crossed. How is this going to go? You don't know. When Waymo first came out, wasn't the greatest product when it first came out. I've been in one now, and I can tell you it's phenomenal. Uranium still holding up here in the $35 range. AMC, you get all these great movies and the stock doesn't move. Can you imagine what happens come September when, yes, they'll report earnings that look good, but now you have no movies until basically Christmas time? Be a bit cautious through there. NVDA, probably waiting on what's going on now between China and the U.S. Got your fingers crossed that things are going to go good. So what we have going on tomorrow morning will be the National Federation of Independent Businesses at 5 in the morning. They're going to get their reading on the optimism index. Redbook Group comes out at 7:55. Supposedly, and I'm not buying this, I think there's a low probability of this. I don't even want this to take place. I'll share with you why. U.S. Trade Representative Greer, who is, I understand, in London with Treasury Secretary Bessent and Howard Lutnick setting up the Chinese deal, is supposed to speak at the Economic Club of New York. The longer the meeting in London goes on, the better I think the outcome. Bad meetings end early. Great meetings go on longer. And if you watch today, Kevin Hessett was on early in the morning talking about what he expected out of the meeting. And he's the economic advisor to the president. And he was on TV saying he expects a shorter meeting, a firm handshake. Those are his words. And we get the rare earth steel and we give some chips and the two countries get together. Well, this wasn't a short meeting. This was an all-day affair that it went so long that they're going to reconvene tomorrow. I don't think that's bad. I think that the two sides have things to talk about, and instead of both getting up from the table and walking out on each other, they're working through them. I like what I'm seeing there. The API numbers will come out at 3:30 in the afternoon, so I think you have to watch that in a big way as well. Robinhood, as you know, it was down today a bit. The disappointment over the weekend was that they didn't get the nomination to go into the S&P. It's coming. I would just be patient on it. Okay, this time around, they didn't get the reward. They'll get it in the end. Stock was down, came back on that news. Now, something I'm covering new for you, one of the viewers recommended Energy and the Energy Transfer LP, which is a firm that moves natural gas and moves crude. It's that simple. This is what it does. I see a base forming in this market where it's trying to set something up right here. When we widen this out and we take a look as to what the chart is doing, you can see that you had a market with, and have one, present tense, higher lows but lower highs. I see sideways action developing. You'd have to take out this low to scare me in the market, but barring that at the 1742 level, I can make arguments for it to pull back. But this type of chart could go higher, could go back to those levels. It's something I'm watching. Is it here that I'd be looking at it? No. not yet from my perspective of an entry point, and that's because it's been fighting at the 200-day average, this gray line, for weeks. It's been doing it since, as you can see, right at the beginning of May, and now it's right into June. So it's about a month that it's been doing that. When it falls, it seems to get towards that 18-day average, and then it bounces back up on you. It's not going anywhere. So look at the Bollinger Bands. That's probably more indicative of what the market might do, with support at 1743 and resistance at 1822. It made one run up here. It failed and then came back to that 18-day average. I think this is consolidation in a market that could become very interesting. So it's on my radar scope at this point. When we look at slow stochastics, they're neutral in the market. So I'm looking at the market from wanting to get involved, but not yet ready to pull the trigger. In MP, we've been covering this, and obviously rare earths are on everybody's mind. The market does have, and I didn't put the arrows here, but you can see them, higher lows, higher highs, overbought. Too many days in a row over the upper Bollinger Band for me to want to follow it up here. Let it pull back. But when it does, I think you have to be ready to pounce into this market. It's telling you that it looks interesting. I think that Broadcom is really interesting here at the 240 level. I expected with the break that you had on Friday when you lost the embedded reading that you'd make a run to the 18-day average. You're just shy of it. Today's low is $1 away. We'll see if you can still get down there. It wouldn't surprise me that it does. And that's where I'm going to see if the market can base out from for another entry point. In Google, back up to the upper Bollinger Band and overbought. So this is a market that finally on Friday, this past Friday, got over two moving averages, the 100 and the 200. And the question was, would it have any oomph and could it go anywhere? Well, the first challenge is generally of Bollinger Bands. I can walk you through this till I'm blue in the face, is an area, a zone where a market has a problem. Now, it doesn't have quite the problem the narrower the bands narrow in as that happens, but the wider it is, it does have that problem. So here you had a market that spent a long time going sideways before it finally broke down. Now we'll see what happens with this. Because of AI, I still like what I'm seeing in Google, and I understand the lawsuits and all that plague this stock, but I like what I see. Finally, it looks as though Netflix is ready to give up some territory, and this is why I'm saying the 1200 level might get of interest. If we step back in this chart, on Friday, you had lost the embedded reading. You see that? That was where you're at. And now the market is, can it get down to that 18-day average again? Robinhood, a day of disappointment because on Friday everybody was looking, can this market get itself really going? I think you had a lot of that momentum built in. You were over the Bollinger Band. You've lost the bullish embedded reading. If it doesn't re-embed tomorrow, no, I don't think it's going through that at that point then. I think it'll pull back to the 18-day average where it could get very interesting. In Tesla, well, Tesla today started off in terrible shape. It came back from 281.85. It's 309, and I know in the aftermarket it's even higher than that. I was just looking at it. So there's a lot of people betting that if their product's good, this opens the door where everything starts turning for them in autonomous driving. We'll all be looking, and what we're looking for are any of their crashes, what are the problems that it runs into, if any, and how many of these cars are they going to put on the road. We don't know that number just yet. If I were them, I'm putting them out gradually, and the word is, up to whatever their number is, 12, 20, whatever they're going to have in this test run. But let's see how they go before you put out a fleet of them. Make sure it's working the way you want. And I'm sure that they've done that already with their own tests. In stocks, market still running to the upper bands. Again, this is all about NVIDIA, moves like this, and artificial intelligence. Is the market overbought? Of course. Am I bearish? No, I'm not bearish. But I do think the market is rich in price. Rich in price doesn't mean I'm bearish. It means I'll wait for a better opportunity in the market where it's not rich in price, and certainly not over a Bollinger Band where it generally has a lot of trouble holding on to a gain. In the financial services, it's getting to be do or die time. You've pulled into the 18-day average. As long as you don't take out 50-45, our trader's going to buy this market here with a tight stop, looking to see if they can get up to the 51.76 level. That's what traders are going to look for. Now, this is an important week for these services. I saw the coin today. I didn't make it up. Inflation week, and it's very smart. It is what it is. We had today the New York Federal Reserve, the look for April, I believe it was, as to what investors think inflation is going to look like going forward, and they think it's going to drop, both shorter term and longer term right now. The numbers were in my newsletter today. The next thing, we're going to have a CPI Wednesday, PPI Thursday, and then on Friday, we're going to get the University of Michigan, another inflation look. That comes out not only consumer, what they think, but where they think inflation. So that's why it's called Inflation Week. It's an interesting week. Let's see where it goes. But I do think the pros were nibbling on the long side. I think they'll bail at 50-45 and take another look as long as it doesn't go under there. I think they're accumulating right here. When I look at the industrial sector, are you embedded? That's the first thing my eye goes to. So both numbers today were over 80. They were over 80 on Friday. They were over 80 on Thursday? Absolutely not. So tomorrow, you can see, you got a 79 reading. So tomorrow determines can they embed or not. The fact that they're up at the upper Bollinger Band, I think they'll be off of that tomorrow, but we'll see if that happens. In energy markets, you have an uptrend where the market keeps hitting the 18-day average and can't get itself going. That is always a bit of a problem. But if you see that the U.S. and China can walk out of this two-day meeting with something concrete, I wouldn't imagine that's bearish on the energies or the service companies or the oil itself. So I would think that that's friendly. So I want to see how that all comes out. In GLD, you're sideways. Gold is now falling a little bit. You can see that the silver has been on a tear to the upside. I'm going to repeat. Go to our website, IraEpstein.com, and just look on the top left. That is where the silver report is. And you'll see I covered SIL, SLV, the futures markets. I give you the seasonality, 5, 10, 15 years. I give you price counts where this market could be headed ultimately. Very interesting market, very exciting market. If obviously China and the U.S. can resolve some of these issues, will that be bullish copper? Of course it would be bullish copper. Once you can get more trade. We saw their trade in May has slipped. I wrote about that in the newsletter today. I gave you the numbers, but you can't look at what was, what's going to be. How much of a trade barrier can we get the U.S. and China down, and what's the right number for everybody to live with? That's why the talks are going on, and what became hope on Kevin Hessett's part for 2 hours with a firm handshake might be arms around each other's shoulder with a better deal. After this, if they walk away with nothing, it means there's real issues for all of us. I don't think that's the case. In BND, well, you're not trending. You're caught in sideways action of the Bollinger Band from the top to the bottom, just drifting, no follow through one way or the other to the downside, to the upside, and you're just back and forth here. In my opinion, not the place to be. The dollar's had a short covering rally. Does it have legs to it is the bigger question. I'm going to repeat, if this market gets under these lows, be careful. The break could be very large. And if the dollar goes down and in the futures makes new lows on the index, you've got to get nervous, because that means anything priced in dollars abroad suddenly is cheaper. Gold is priced in dollars. Silver is priced in dollars. Grains are priced in dollars. Energy is typically priced in dollars. You look at all these things, and as the dollar falls, that makes them cheaper on international trade. That's a bid to them, not an offer. It's a bid. In FXE, you're in a corrective mode. You're drifting sideways while the trend is up and the bias is up. In my opinion, you've got to work off that overbought condition. So you put it all together, you come up with the game plan, and I have one for you. Right now, and I mean right now, just go to iraepstein.com. Look on the left here. You see in bright green this metal report. Give it a click, and I hope you like the report. I'm Ira. You have a good day. There'll be the icons up here. You can click them at any time. It'll take you there. Have yourself a good evening.